So for the month of August, the S&P 500 is down roughly 3.5%. Typically, when you're trading or investing, you want to buy low and sell high. So we're going to trade along Jim Cramer as he's recommending 5 different stocks that have international exposure.
Hey, you can use this period of weakness to actually buy the best beaten down stocks at even lower levels. That's what we do around here. And that's why I've spent all week highlighting the worst performers in the S&P 500 for August. Not the best, but the worst, in order to point out my favorites. And tonight I've got 5 more for you. We'll start with American Airlines. I hardly ever talk about that one. Just riding the travel boom all throughout the spring and early summer. But it pulled back more than 23% from its highs in early July, including a 13% decline in August alone. Every airline's been under pressure because a bunch of new domestic capacity is coming online. Just consumers are really starting to feel the pinch from higher interest rates. Boy, talk about deja vu. American Airlines always got dragged down by worries about its negotiations with the pilots union. Yeah, although the union finally approved a new contract earlier this week. Going to cost the company some money, but it could have been a lot worse for the business. Management seems to think that they can offset those higher wages because they didn't raise their full-year cost per available seat mile forecast yesterday, even though they said costs will be higher in the third quarter. I'm regarding it as a mixed story. All right, how about the industry-wide worries? I think they're somewhat legitimate. But these are domestic concerns. That's why I recommend circling the wagons around the airlines with the best international exposure. For that, that's United, Delta, and yes, American. While it's my least favorite of those 3, American sells for less than 5 times this year's earnings estimates. Wall Street clearly thinks the numbers are about to fall off a cliff, or at least certainly not be met. So if they just hang in there, coming kind of close to where they are right now, I think the stock is going to go higher because it's got such a cheap valuation.
Stock up, we have American Airlines. And we can see from the monthly chart, we have this big monthly sellers level at $44, and we have this big level at $7.50, which is a monthly buyers level. And we have a huge support resistance band at the $25 level. And if I scroll down to the weekly chart, price was range bound, but the momentum was up as this leg up took out the pivot high to the left. So in the process of this leg up, price did form a weekly buyer's level at $17. However, with the market pulling back in the month of August, we see that American Airlines topped at $18 to $19. And then the weekly buys level at $17 was breached. So I'm looking for now just a retest at the support level, which would be roughly another $2 below current price at $14.58. Let's see the setup. Is going to be the following. The bounce at around $12.50 to move higher. First retest, first target at $18, which was the origin of the down leg.
Next up is another household name, Bank of America. GDC is down about 11% in August thanks to fears of slowing loan growth and new banking regulation. 11% is a lot for Bank of America. I think you're getting an opportunity to buy one of the best nationwide franchises at a terrific price. And I have not pushed this stock for a very long time. Remember, every time the Fed tightens, Bank of America instantly gets higher in net interest margins, making them more profitable. At these levels, the stock sells for less than 1.3 times its tangible book value, a huge discount versus its long-term average. I understand worrying about the smaller regional operators, but I'm not worried about Bank of America. All right,
Next up is Bank of America, and price fell into this monthly buys level at $29. Where it is currently trying to figure out what direction it wants to go into next. Now, the fact that price has been in this level for the last several months indicates that there are no more unfilled buy orders, and price can continue to move down to fill the gap at the $25 level at this time. Let's just scroll down to the weekly level, weekly time frame, and just so you can see that gap, this has to be on earnings. Let's go down to the daily time frame just to be sure. So it wasn't on earnings, but look at this volume. Really massive volume coming in November of 2020. All right, so I'm going to scroll back out to the weekly time frame, take this monthly buyers off, and if price continues to decline and breaks this pivot low at 26.40, look for price to fill that gap down at the surely be closer to the 24.33.
All right, how about another that I don't talk about because these are coming down so hard? I'm talking about them tonight. Electronic Arts. That's the video game publisher with a stock that's down more than 12% month to date. Wall Street wasn't thrilled with their most recent quarter, not because of their actual results, which were solid, but because the guidance for the current quarter came in light. I'm more focused on the fact that EA actually raised its full-year earnings forecast. I think they've been doing pretty well, given that this has been a tough environment for the video game industry. Plus, you need to consider the scarcity value of EA now that it looks like Microsoft will be able to buy Activision Blizzard. Personally, I do prefer Take-Two Interactive. That's Strauss Zelnick doing a good job, the other big publicly traded video game publisher. But EA is certainly enticing down here, trading at less than 18 times this year's earnings estimates as a growth stock. Much cheaper than Take-Two. Then again, Take-Two might have a new Grand Theft Auto title coming out this year, and that's coming out next year, and that's what a lot of people are excited about.
Next up, we have Electronic Arts, and really, for the past 3 years, price has been range bound. You have a top at 140, where we couldn't really get closes above this 140 level. Had wicks. Let's put it 145. All right, so this is Electronic Arts, and you can see you really could not get price to close above the 145 level on the monthly chart. Downside, you have buyers stepping in, as indicated by these buying wicks down at the 110 level. So that becomes your football field. This is one end of the football field. This is another end. So this is the end zone, and that's an end zone. And in the middle, you figure let's just say 130. That is the 50-yard line, where the buyers and sellers are evenly distributed. The 144, the sellers are in control. The 110, the buyers are in control. The extremes, you have an imbalance between buyers and sellers. Let's scroll down to the weekly chart, and we can see the most recent highs had a rally in price, base in candles, and then a drop. So rally, base, drop, and so the momentum's to the downside. You have a drop, base, drop, retest it, and potentially it appears that price is going to continue to move down. So we do have, although not on the greatest volume, we do have a weekly sellers level. Remember, it's in the middle of the range, so anything can happen. But price is looking for liquidity. So I would anticipate price moving down to that 110 level, which has served as support 3 different times in the past. Just scrolling down to the daily chart, and you can see the move out was not the best, was not the strongest. There's no volume, but however, the pullback, it has worked thus far as price has pulled away a couple of dollars since hitting this zone. Also, what's worth noting is that you have the 200-day moving average now serving as a dynamic resistance.
Fourth is a lower profile company that I don't talk about enough. It's called Ball Corp. And they make metal packaging for food, beverages, and household products. Soda cans. Here's a stock that's down about 10% in August, and it's done almost nothing all year. The can business is tough in a world where aluminum prices are down 45% from their highs last year. Gives them less pricing power. So why bother with this Ball Corp? First of all, these guys operate in what's basically an oligopoly, meaning very limited competition. For example, they've got roughly 40% market share in metal beverage packaging across every region where they do business. That is staggering. A lot of price control here. Second, and more important, Ball Corp just announced, just now, the sale of its non-core aerospace division last week. BAE Systems is taking it off their hands for $5.55 billion in cash. That is an excellent number. They're planning to use the proceeds to pay down debt and buy back stock. Going forward, this will be a simpler, more focused story. I never really liked the fact that they put aerospace with the packaging business. I like aerospace a lot, but Ball never got much credit for its aerospace unit because it was buried within the packaging business.
This is Ball on the monthly chart, and you can see we have resistance at the $60 level, and you can see you have the lows down at the $48 level. With resistance support down at the 44 level. So price is in a fairly tight range for Ball. However, the chart suggests you have some downside momentum, downside risk. The chart suggests price is going to move down another $4 to this $48 level. Let's go to the daily chart. And as you can see, just price has been range bound. You have one end of the extreme down at the, say, the $50, $51 level. And on the upside, you have resistance at the $60 level to $61 level. I'm looking for price to fill this gap down at 51.60, but more so I'm looking for price to move down to the 48 level for a potential bounce, although it could be short-lived as the liquidity is going to be found lower at this resistance support band at $44.
Finally, let's round out this series with one more beaten down industrial name that we have liked and had on the show, and that is Cummins. That's the terrific engine maker, especially for heavy-duty trucks. Lately, I've been recommending Cummins because they've made major strides into hydrogen-powered engines, which is the long-term, well, let's just say, hope for big truck engines. It's going to take a long time for that part of the story to play out. But they've already doing plenty in hydrogen right now, building huge electrolyzers, which are machines that produce pure hydrogen by splitting up water molecules. When Linde announced the huge new green hydrogen production plant near Niagara Falls, they bought the electrolyzer from Cummins. That's where you have to go. Don't forget, there's a lot of federal money from the so-called Inflation Reduction Act going into clean energy sources, and it doesn't get cleaner than green hydrogen. Now, that said, Cummins reported not so hot quarter 3 weeks ago. Management sounded a bit more cautious than I like. Certainly some cautious more than some of the peers in the trucking industry. That's why the stock's been hit so hard this month. And the slow motion collapse of China certainly hasn't helped either. However, I think the worries about the core engine business are already more or less baked into the stock, given that Cummins now sells for less than 12 times this year's earnings estimates. And I'm simply too excited about the longer-term hydrogen opportunity to get too worked up about management's conservative commentary on the heavy-duty truck industry. That's why I endorse buying Cummins on weakness.
This is Cummins on the monthly chart, and my eyes gravitate to this resistance support level down at 190. Price could not close above the $260 level. Currently, price is roughly in the middle between the resistance and the support area. If I scroll down to the weekly chart, price is in a big sideways range. You can see price recently broke this short-term uptrend line. Price collapse, kind of basing at the moment for a potential move down to retest the resistance support band at 190, which is roughly $40 lower. Just checking to see if there's any levels of interest on the daily chart. And as you can see, there's really no volume, although price stopped going down roughly at 204 and started going up. You have all these moving averages now above current price, which should serve as a cluster of dynamic resistance. Look for price to continue to move down, at least to test the previous pivot low at 204.